Thank you for joining us for another episode of the Finance Magnates podcast for talks with leading people from the blockchain industry. And today we have a published author and a blockchain expert here to tell us about his new project, David. David, would you please introduce yourself to our audience?
Sure. Hi, everyone. I'm David Siegel. I'm an American living in Switzerland. I spent 20 years in Silicon Valley, so I'm the world's first web designer, if that doesn't mean anything anymore. I wrote the first book on web design and moved from California to New York to be an angel investor, and I've been in Europe for about 3 years now, working on blockchain stuff.
Right. And can you tell us about 2030, your group?
Sure. You've probably heard of Consensus in New York. So Consensus is an amazing group of people, really elite, world-class people with unlimited funding. I mean, it doesn't get much better than that. They're going after big projects, and it's really amazing to watch. And that's how I got started. I just got sucked into Consensus and their Slack and spending time with them and helping them with explaining and writing things. And then I decided that I kind of wanted to do something similar, but maybe a few hundred times bigger by making it very open and inclusive for everyone in the world to join. So 2030 is an open community of blockchain innovators. Anyone is welcome to our Slack, and our newsletter has, I think, a couple thousand people on it now. And we're not really technologists, although several are. We're really looking for those early adopter opportunities to go after from an entrepreneurial perspective. How can we create this new world that we think will be mainstream in the year 2030? So we have kind of 13 years to get there. And now it's time to start building step-by-step things that people we think will adopt to use blockchain and cryptocurrencies and digital assets in their everyday lives. There are many, many opportunities. So we're looking at all different kinds of things, from real estate to healthcare to financial products. We do have one financial product that will come out later this year. That's an index. So this is of interest to your audience. It's called the Cryptex Index, and it's meant to be like the S&P 500 of the crypto world. It's a very broad, more than 50 cryptocurrencies index, very smart weighting. It's kind of like an ETF. And I think it's better designed than any other index I've seen so far. That'll be coming out later this year.
Will that be exchange traded or on the blockchain?
That will be what we call a free range token, just from our website. And then there will be some crypto exchanges that will carry it because it's really not regulated. So then if we want to regulate it, then it has to be a fund. And then it will only be available to accredited investors. So because it's really an easy way to buy things that you would buy anyway, we're going to launch it unregulated, and you'll see it on some crypto exchanges, but not the major exchanges that have banking licenses.
Okay, sounds very interesting. So make sure to update us when that's when that's more in an advanced stage. Right now, the reason I've asked you to join us is because of the crowdfunding that you've announced for a new project called the Pillar Project. So I wanted to know, what can you tell our audience about this new project? What does it entail?
Right. So it has to do. I did a lot of work last year with Licka, that your audience probably knows. Licka is an amazing company with an incredible product, and the Licka wallet is really inspiring because it's a big exchange, but it can't be hacked. Right? You're familiar with that. It's what we call atomic ownership. So your assets are here on your phone, and you have the private keys, and they don't. So even if somebody held a gun to their head and said, "Give us all your private keys," they can't give the assets away. So atomic ownership is a big deal. And we realized several months ago, I put two things together. So one is that I think the wallet is going to be the center of your everyday digital life. I think the wallet is a huge thing, and it's more important than most people realize. And it's going to start with the crypto wallet, I think, because the Apple and Google wallets haven't really caught on. I think the crypto wallet is going to be that Kickstarter that gets this whole new world of digital assets going. And so the world of these, crypto assets and the world of the personal data locker, which I've been working on for more than 15 years. I wrote a book about it. It's called Pull. That came out in 2010. And I've been really writing and talking to people and talking to investors about how to get this started. The personal data locker, we think that the Pillar wallet will evolve from a kind of a normal multi-currency wallet and multi-token wallet to a personal assistant that can help you do everything. So we're solving two problems with Pillar. One is accounts. Accounts are dangerous, right? Everybody knows accounts are a huge point of failure in any system and a big security vulnerability. So they're kind of trying to fix accounts with more cloud software. And our goal is to rip accounts out and replace it with the wallet. So you'll have all of your stuff here. And whenever you want to interact with a system, like a bank or to buy something, you won't have an account with settings and your credit card number and all that stuff. All that stuff will come out, and you'll just interact with the API of the system through your wallet. So all of your assets will be here. Your mortgage will be here. Okay, all of your financial portfolio will be here, meaning you'll control it and no institution will. And then whatever that institution provides, whether it's market making or derivatives or products and services, you'll interact with it by trading API keys, which are tokens, right? So all your tokens and your ownership of things will be here. And the accounts will disappear. So you'll just have tokens. And we think there'll be millions of tokens. And so Pillar is designed to be kind of a meta level above that. So here's an example. What's an exchange? An exchange, you have an account, so you have your assets, and then you have an order book, and then you have a matching engine, and then you have settlement. That's an exchange, right? And even the world's largest exchange does not have the same liquidity that all exchanges combined do. So what we want to do is make it so that when you want to buy or sell something, you put your order into an order book that is, say, the Pillar order book, and it goes to all exchanges. And now all exchanges can bid and take pieces of the order book, and you can choose whether you want it fast and more expensive maybe, or slow, wait for a deal, or limit orders or whatever, but you're now addressing all exchanges that have APIs. So your Pillar wallet will bargain on your behalf to get the best possible deal, maybe for several different slices of an order, right? So now you have exposure to the entire market, and that's going to boost liquidity, by a couple orders of magnitude. We're trying to do that for all markets, whether it's dating, buying cars. I mean, today to buy a car, just like with exchanges, you've got to go to 20 different websites and do searches inside those silos for every single, site that has its own API and its own search query language and all that. And in our case with Pillar, you'll just put it out and Pillar will help you find the best deal for you. So it's a wallet that becomes the personal digital assistant. There are two key things. We're getting rid of accounts and we're going to get rid of apps. So what are apps? Apps are little mini desktop versions, versions of your desktop apps. The whole operating system here are little mini desktop apps, right? They don't talk to each other. They typically do one thing, and your credit card number is in most of these, right, to facilitate all this stuff. So our goal, and it's different from the status wallet. They don't have a wallet, they have a system, which kind of, I don't know if you followed the status ICO. They just raised $270 million 2 weeks ago. They want to give you a dashboard for your life, but they want you to have apps. And we want to get rid of apps, get rid of accounts, get rid of apps. You don't need apps. If you're kind of going on the way to the airport and then taking a plane and then checking into a hotel, going to a conference, you're going to use 27 different apps. And our goal is you're going to use services, say what you want, and the services will come to you. So eventually, this is our sort of stated long-term goal, we want to replace iOS and Android and run this device with a personal digital assistant you could just talk to and trust to help you find what you're looking for and do what you want to do, because it has all of your assets that you can work with right here. So you can approve things. People just want to go to the hotel. The phone says which room. You go to the room, you go near the door. It says, would you like, enter? Yes. Go in. Right?
Mm-hmm. So just to try to, if I can try to simplify, and you can correct me if I'm wrong. So basically, the wallet will be digital identity on the blockchain in order to manage all the other blockchains. So if your broker has a blockchain that handles transactions, the hotel, like you said, has a blockchain for managing room occupancy. You would have the wallet will actually be the one key that you can use across all other blockchains in order to so you won't have to register, so-called, with every other service.
Not quite.
Okay.
And people have asked me, okay, so why isn't this a bunch of smart contracts in blockchain? Because we want to take accounts out of all these server-based. I mean, most of this stuff is data center apps, right?
Mm-hmm.
Apps running on data centers, and they're written in Java or they're written in .NET, whatever. All we want to do is take the accounts out. So now we're doing APIs and services, and as you go through your day, you'll talk to thousands of servers and cloud-based software and probably some blockchain, but much of it will be today's services just atomized and put in a way that your digital assistant can work with. So yes, there will be some blockchains, and by the way, it's not just an identity service. There are really about 4 or 5 really good blockchain-based identity formats coming out now.
Mm-hmm.
And we want to work with all of them. So we're kind of one level above. And you'll have a lot of tokens. And some of these tokens, it's kind of to be clear about it, some of these tokens will be blockchain-based. And some of these tokens will just be what we call tradable API keys that just run on servers, no blockchain, but that's okay. And all of these lower level tokens for when you pay your driver or you get a pizza or you check in wherever, buy your groceries, instead of using Visa and MasterCard, and we know how much that costs and the fraud and so forth, you'll use the pillar token, which is a meta token. So you may have thousands of tokens underneath, but Pillar will make it so you don't have to see those. The Pillar token, the system will buy and sell these tokens for you to enable you to do what you want during the day. And you can just use Pillar as your unit of account. Or you can go one level up and just use dollars or pounds or shekels or yen. That's fine too. You don't even need to see pillars, right? So the goal is to just make it super familiar and easy for consumers to interact with these services. Whether it's blockchain-based, it's a smart contract, you're renting a car from Hertz, on their server, it's fine.
Mm-hmm. Well, I'm trying to get the model. So a lot of companies, obviously finance companies offer APIs, but what about the big silos, as you call them, of our lives, which is Facebook, Google, right? Why would such companies will be willing to give up on their proprietary apps in order to to open up and lose all that those eyeballs, as they say in the business.
So these things are silos, and silos tend to trap you by holding your data. Mm-hmm. Right? Those people who want to control you will do so by controlling your data. Right? So great. Mm-hmm. There's natural resistance to this. And you can see it right now in WeChat. WeChat doesn't really have apps inside of WeChat. They have services. Okay, it's much more informal, but people are starting to pay for things with WeChat. You can kind of run around Shanghai and pay all day with just your WeChat wallet. So also there's laws coming into effect like GDPR and other privacy laws that will make it so that you're going to have a brokerage account. You may have to make it so that the ownership is atomic and remove that. And the other thing is remove the vulnerability because you're concentrating assets. So I just gave a talk to CIOs a couple of weeks ago in Monaco, and I said, look, are we winning the war on cyber terror or are we losing? And they said, we're losing big time. And I said, but look at all the assets you've got under the roof. What if you take that asset concentration away? You can still do business. You still have your margins. You just don't have this liability of customer data. So you're going to be trading off between trapping people and probably losing customers more and more and more, or being more open and competing on the service that you offer and not on trapping people in the account. So we think there's a natural, drift in this way, a pull, and we can see it in China already. It's also mobile first. So now instead of a brokerage, you'll have any brokerage. So now the brokerages will have to compete. Now, Morgan Stanley might not like that, but the consumers will, right? So you better jump in and play because I think it is going to be a level playing field.
Mm-hmm. Question is it's not even a question. I mean, like Apple and Google will try to dominate something like that, if they can, right? I hope they can't, but they're definitely going to try.
When Google launched their company, Yahoo dominated. So, hey, it's creative destruction. We'll see what customers want. Do they want more choice, more autonomy, more security, or do they want to trust Facebook and Google with all their information? And by the way, they sell it 10 different times to thousands of different vendors, and they know everything about you. So it's up to you.
Okay, so if you can explain more about the world that you envision, like what's other than apps, let's say, melting away, how else will the world be different once these technologies will be more ready, consumer ready, and more widespread.
Okay, so this is the world of pull, which I would hold my book up, but I gave it to a guy in London when we met for lunch a couple months ago. So I don't know. I think I have to buy another one on eBay just to hold it up because all my books are digital now. But in this world, we're really lucky that I've spent 20 years on the personal data locker, and token sales just happen to be a big deal. And open source software is now coming to the fore. So how do you fund that? Well, it turns out that the token model is just right for this. So we won't make any money on this project, right? We are just going to build the core and create the community and get lots of people naturally involved in building not apps, but services that fit in, so that when you go to your doctor's office, there's no paperwork and there's no apps and you don't start from scratch. It just magically works. All of your test results and your prior history of everything, your medical history just goes, and you just give it by permission. So this is the concept of least privilege. You give out your data as it's needed on an as needed basis. You don't have to give, for example, your age. If they ask, are you over 21, you can just give them a yes or a no, right? You can give them a token that signifies the answer without giving them any more information than is necessary. They can send you something to your address without knowing your address by sending it to someone else who can then send it to you, someone you trust. It could even be pulled to you. So I talk about this in my book. This is going to change from this kind of vendor relationship management, customer relationship management of vendors, to vendor relationship management, a concept that Doc Searles at Harvard talks about a lot. So you'll be in the center, and all your vendors will be all around, so you will not be so locked in. I mean, UPS, the package company, spends more every year on computers and data and servers and data centers than they do on trucks. Why? Because they want you locked in. They want you registered and locked into make it easy to use in their system. But in the world of pull, you may say, hey, package at Amazon or whatever, I'm going to be over here on that date. I'm going to pull the package to me. It may go through 3 different trucks or airplanes and trucks. It may be from FedEx to DHL to UPS at the very last mile, and they'll collaborate because you'll pull it to you. So the world I describe in my book from 2010 is just getting started. And the idea is that kind of everything is more open source and more customer centric. You pull all the data to you. So you'll think about all the custom manufacturing that's going to happen, right? With 3D printing and being able to directly order from the factory exactly what you want. This is another pull scenario. So you say what you want, and you'll pull it together by using APIs and using your personal digital assistant. There's one more important thing. This token creates an economy. So we can change our economy from a lot of heavy marketing and a lot of maintaining apps. I mean, when you have an app as a company and an app, you have 10 apps. There's 3 major platforms. There's 27 different browsers. There's 83 different form factors. And you go through a lot. You spend at least half of your resources just maintaining the app infrastructure before providing the services, right? And with the Pillar token, we are going to create an ecosystem, economy, so that people can just offer the service that they're good at, and we take care of all the rest. The system and it's open source. It's not a single company. So someone was saying, well, WeChat is going to do all that. Really? Well, WeChat is a single company. We're open source. We have no profit margins. And I don't think you're going to put your mortgage into WeChat. I could be wrong. But Pillar will be designed from the beginning to have your entire net worth and to have it managed by your digital assistant. So I think that's a pretty different world, right? So here's a good example. People think about the car future. You get into your car and somehow you'll turn it on with your phone. But if you, in the world of push, then Mercedes-Benz wants to keep all your data. So then you'll log into your account and manage your car data on the Mercedes-Benz website, right? But Porsche wants you to have your data on the Porsche website. Well, if you have both cars, now you have at least 2 logins and websites, and they don't talk to each other. And then you go to your borrow a friend's car or rent a car or something. And now all of your data is spread out all over again, right? But in the world of pull, in the Pillar world, all of it is here. The Pillar wallet is what you need to start a car. It has your license in it. It checks that your license is up to date. It has your insurance. Your insurance is up to date, right? You got this many people in the car. It's going to rain. Something else is happening. Your insurance can adjust on the fly. All of that gets recorded onto your Pillar wallet history, so you can manage your data. If you want to then sell it to companies that are marketing, then you monetize yourself. There's no more middleman.
Okay, so from a point of view of a finance professional that's watching us, right? That has to prepare for the future, have his brokerage or bank or whatever financial service provider. So how would you manage yourself as a company in an age where everything, as a financial company, in an age where you don't so-called own the client relationship?
Right. You get to compete on value, on adding value, right? I don't want to create derivatives or risk management tools or markets. So you get to do that for me. And if I and my personal assistant like your service, then we'll use more of it, right? We'll want more of it.
Okay, but from what I understand from the what you wrote, so it's not really me deciding. It's more of the artificial intelligence on the phone, right? The digital assistants that's actually examines the different offerings. In the background, it does all the calculations. So I just ask for get me the best rate for pound dollar, and it checks with all the brokers for all the options and different leverage, risk management, stuff like that, and decides for me based on previous preferences.
Right, and that's because of this. This is the graph of consumer willingness to work with their own data. About 1% of consumers are willing to work with their own data, and then it just falls off a cliff. People do not want to work there. We've just seen hundreds of projects. I've been on the boards of a dozen of these projects that promise you control over your own data. The vast majority of people do not want to control their own data. It just has to be that when you walk into the dentist's office, it's there, right? The dentist charges you your $50 copay. You just say, okay. That's the consumer interface, right? They're willing to do that. They are not willing to manage their data. They're not willing to deal with all these competing offers from all these different brokers. They have long-term objectives, and it's not robo-advising. It's your own personal platform with your own. You can choose your robo-advisor, and it will manage all your stuff. You're not going to rent a robo-advisor from a vendor. You're going to choose which algorithm or what objectives, and then the system will execute on your behalf. The amazing thing about this world that we're in now with crypto is it can execute all kinds of things, right? Without credit cards and without going out to the banking system, right? So now with smart contracts and with tokens, we can actually execute a lot of our desires. And that means that the AI and the personal digital assistant will become your interface to all the things you want to do.
Yeah. So what type of, or should I say, what level of artificial intelligence you need to order to push that? Like, it's like you said, most people would choose comfort, or I should say ease of use over anything else. So, right. Like, what type of AI do you think we need to get so people would be willing to engage in this?
Well, let's start simple, right? We're not trying to boil the ocean or take the next leap in artificial intelligence and deep learning. If you could, for example, you want to exchange dollars to Bitcoins or Bitcoins to Ether, then the first thing we want to do is hook up 20 or 50 or 100 exchanges to that with their APIs. And you can just pick something simple like go with the cheapest one in the next 5 minutes or something, right? Because there's no big difference among services because a Bitcoin's a Bitcoin, right? And the blockchain makes the atomic swap, so you can't get screwed on the transaction. So simple rules and heuristics to start, right? That get people used to this, and then it can get a lot more sophisticated. It can do portfolio rebalancing and risk management, right on the fly, eventually. But I think we're going to start with some pretty simple use cases.
Yeah.
Right.
Start simple and build up on that. Because
one of the things that you learn when you get into Ethereum is you're probably going to interact with smart contracts, and many smart contracts will require a deposit. Right? You rent a car or a bike, you'll leave a deposit, so you'll have rights and obligations to all these, and you don't want to manage all that yourself. You don't want to watch these contracts and think, oh, okay, in 2 days I'm going to get that deposit back, so I can do it. You don't want to manage all that, right? So the Pillar wallet is this meta level up that does all that. So it gives you a dashboard saying, here's how much money you've got locked up in smart contracts for the next week, 2 weeks. Here's your aging schedule. Here's your credit. Here's look, the price of your flight just came within range. Want me to buy it? These kind of fairly, like kayak level of intelligence. So we could go back 10 years in artificial intelligence, and that level is fine for a while.
Okay, so I guess what people are going to ask, or should I say, people that are not up to the, don't know everything about technology, and just from a layman's point of view, it would seem more dangerous to have all of your accounts, all of your services, your medical records, and your bank records all connected to one one device.
Right.
Okay. So how do you explain to people that this is safer than the current situation?
Okay. Really important. First, we're losing about $500 billion a year to data theft from data centers. About 1 trillion records every year get stolen from government and commercial data centers, servers. So we're not as safe as we think right now. The government only protects a certain amount of your assets with regulated insurance, not most of it. And second, so it's not on the phone, it's on the blockchain. This is really important, and I talk about this in my book from 2010. These things are going to get a lot cheaper, right? That's why Android is going up faster than Apple is going up, right? A lot cheaper. So Moore's law is going to make it so that in 10 years, this thing is $20, right? Or the next level, 3 levels up, is still going to be about $20. And so that means you don't need the world's most expensive operating system that's designed for the desktop. You need to be able to just, you'll have, let's say, a bracelet, a ring, a chip, your eyes, your face, and it says, oh, I see who you are. I recognize you. Now it's your phone. You lose your phone. Here, you can borrow mine. You look at the phone. Now it's your phone, right? These things are just going to be disposable. In the back of the airline seat, it's just going to fold down, and then it'll see you, and bang, all of your stuff will be there. It'll be yours, right? So the assets live on the blockchain, which essentially has never been hacked and has never really lost any value. There's a few stories from a long time ago, but in general, you can assume that blockchains do not lose value. They are not hackable, and they have this atomic security around them. It would take all the computing power in the world 1 billion years to crack the first address, okay? So security is at the core of this. And you could put all the assets you want. Your net worth isn't that much to a hacker, right? Hackers like billions of dollars, right? That way they can bribe the employees who work at the data centers to get passwords and things they need. That's how it generally works. It's not like they're hardware hacking, right? So all of your assets can just be under your control on the blockchain. And when everyone does that, now there's a huge attack surface, and the hackers have no good target, right? A huge difference. So we're atomizing the risk in a big way. We're not concentrating it. And that's the only way things are going to scale this century. Get rid of accounts, get rid of the apps, and atomic ownership so that you control everything will turn the world from push to pull.
Well, I mean, when the internet was a bit younger, that was the promise, and now it seems to be all going towards centralization all the time, and hopefully blockchain technology and stuff like that can bring back the earlier promise.
Yeah, somebody tweeted the other day, I'm risk averse. That's why all my assets are on the blockchain.
So right now we're seeing I would say a gold rush of crowdfunding, token sales, and ICOs, and the Pillar project is later this month, right?
July 15th, and it's different. Most ICOs, we now call them token sales. Mm-hmm. So most token sales take place usually over 3 to 4 weeks.
Okay.
And what happens is they have a little cutoff date for a certain level of discount, and then they go to the next one. And what we see over and over, Avi, is everybody buys at the last second at the end of the discount window period, right? And then they wait a while, and then they buy again at the end of the next one. And so we're throwing that away, and we're just doing one 60-hour window with no discount. It's just going to be the offer price for 60 hours, start to finish, and then it's going to be over. So that's coming up in 12 days now, and it's important for people to get ready. It's going to be hard, I think, for the average person to get in, because I think ours is going to be one of those that we're working very hard to make sure everyone understands this is a really legitimate project. If I teach a little bit, I've got webinars and stuff on crypto investing and ICO investing. Number one, this is just an amazing time to finance open source projects. I really wouldn't touch anything that's not open source at the moment, just because it's an incredible opportunity for open source people to build big things, and for the token model to show that it can work. And number two, do your homework, right? Read our white paper. I've been working on this for a long time. We've got people joining us every day. 2 people a day come in and say, we want to join you. How can we help? We have volunteers. All of our people are volunteers. We don't pay anybody. No one is getting paid. Yes, people will get pillar tokens in our crowd sale, but I can tell you about 40 people are working on this because they believe in it. Because this is why, even the company that made the video for me, which by the way is in Tel Aviv,
cool.
is getting paid in pillars. A bit of cash, but mostly pillars, because they made the video and they go, really? Is this really possible? We love this, right? So people are coming on board. It's passion driven, and maybe that will give us enough of a wedge in against Apple and Microsoft and Google to get some traction and then spread it out worldwide. We certainly hope so.
Yeah, well, you've mentioned that you've worked in the Silicon Valley for a long time. Do you think that this new token crowdfunding world that's suddenly was in that, you think that it's a serious disruptor, a serious danger to VCs?
Yeah, I'm writing a big piece on that, so you'll hear about it soon. I think that the game is over for many traditional financial players, because we're not just digitizing the old paper ways of doing things, which is kind of what we've done, right? I mean, we're still settling in 3 days. So I think Lika is a good example, and many of the new open source projects, and now with digital identity, we're going to start tokenizing much of that world. And I expect equities, debt, derivatives, private equity for sure will all go essentially into a wallet. And I don't think we have any evidence that venture capitalists add much value. I can point to several good studies of this. They think they do, and there's kind of a old boys club, a country club around, and the VCs work very hard, but they don't really add any value. There's great evidence that if you just bought a whole bunch of startups, a broadly diversified, like an index of startups, without really looking or asking any questions, you'd probably do better than almost all VCs. You'd be in the top decile of VC returns. This is work by Robert Wilkbank. You can look up a great document called Returns to Angels and Groups. Angels and VCs, they build concentrated portfolios, and they rely on luck to outperform the market. And I think so, and this is something I've written a big essay about. It's called globalbetaventures.com. I think you've seen that. Yeah, it's really about index investing for startups, for high risk, high return. And so if you could buy a broadly diversified portfolio of hundreds of these things, you'll probably have a better return than almost all VCs do. And that's something we're going to be doing at tokenfactory.io with our index products. So yeah, I think that indexes will replace expert judgment, and that the market, and what we call beta investing. I think beta investing will do much better than alpha investing as liquidity worldwide increases.
I talked to a VC guy recently about the ICOs, and he said, if you invest in in all of the companies that come to them, right? More like an index, right? That's possible that you'd get better returns from them. But he said, that's because people know that there is due diligence and there is a certain level expected. He said, like, if you look at the ICOs, a lot of people do, a lot of preparation, a lot of fine work, like you've done at Pillar. But some people, I mean, obviously they see it as a chance for for easy money right now.
VCs have to defend their position, right? And they don't look much at data. So I would say, and I've studied this quite a bit, and I've written about it. that a simple heuristic will do it. So there's a lot of crap out there right now.
Mm-hmm.
There's a lot of scams coming to market. There's a new coin offering every day. And so it's more than gold rush. It's a flood of people just trying to get through this gate and get hit by the money truck. But you can use some simple heuristics for this to just weed out, let's say, if you can get 60-70% of the scams out and just buy everything else.
Mm-hmm.
So you'll have a few scams in your portfolio, but you'll probably outperform almost anybody who's cherry picking.
I see. Do you have a few of these heuristics ready to share, or is it
I'm going to
just
be
saying?
talking about it a little bit. You want to base it on data, and the market's moving pretty fast. So it's definitely a hot, dangerous area. Look, I think the regulators will change this. So I think in 6 to 12 months, this game will be over in some way. It'll be different somehow. But I believe long term, we're looking at tokens. We're looking at digital representation of shares that can be traded, of assets, of any financial instrument that can be traded easily. So liquidity is going to go up like crazy. So that just takes out all the professional judgment and even the robo-advisors. I just think it's time to switch over to beta investing. Buy the market, build a broadly diversified portfolio so you don't have to predict the future. This is what Nassim Taleb talks about. Did you read Anti-Fragile?
I've read the previous book.
Read Anti-Fragile. It's awesome. It's long. It's wordy. It's great. I encourage people to build anti-fragile portfolios. And hey, on July 12th, I have a webinar coming up on postmodern portfolio theory. So people who sign up for our webinar will find out about, or for our newsletter at 2030.io, we'll find out about that. And I invite everybody to come learn about postmodern portfolio theory.
Yeah, sounds very interesting. Okay, I see we've already been talking to 40 minutes. It went by very fast. Is there any other subject that you think we need to raise right now that our audience needs to know about Pillar?
Pillar, yeah, sure. Pillar is a movement. Pillar is something whose time has come. It's open source. So we're already talking with governments. We're talking with large companies. We want to collaborate. We're not going to build a bunch of software and figure out how to launch it. We're going to collaborate with people who want this to be in existence. So large brokerages is a good example because they have programmers and they have to figure out how to deal with GDPR and legislation, and they don't want the concentration risk. So when they hear that they can just get rid of accounts entirely and give wallets to people, maybe they'll want a white label wallet. Great, let's work on that. It's open source. Let's put ourselves together here and change this world from push to pull. So the beginning of August, we're gathering in a place called Poprad, Slovakia, in the middle of Slovakia at a resort town. And we're all coming from around the world to start planning this. It's after our fundraising event, obviously, and we're not paying for it. It's all volunteer. Get yourself to Slovakia. It's also a hiring event if people want to come and work for us, get a job. But we don't interview. We don't really have management. We don't believe in looking at resumes. We just volunteer. It's a volunteer culture. And so anyone who's listening who's excited about this, come to Slovakia in the first week of August and work and play with us and get to know us and start learning from us and start contributing. And that's how we hire people. When people get excited and they want to help, these are the people we're going to hire. It's really a very different way. You've probably talked to Richard Olson a bit at Lika, have you?
Yeah. Actually, he's going to be in November. He's going to be a guest on my blockchain panel at the London Summit.
Great. So I have a fairly similar belief in Richard, which is just to let people do what they love to do and don't manage them, but let them collaborate. The big difference is, and I really respect Richard, he's taught me a lot on the world to collaborate. And he's got people, I think, in 40 countries working on Lika. It's amazing. And I want to have innovation centers where people work in the same room. So that's my philosophy. So after the token sale, we're going to Slovakia to plan. And then in September, we're opening London's first blockchain innovation center. and we'll be in London in the same room collaborating and working on building Pillar. And we'll be reaching out to people and doing events and lots of community building around the world, but we'll still try to come to the same room to work together and collaborate. Because that's when you don't know where you're going, and it has to be agile, and it's day by day, week by week, and you always want to be shipping software. Coordination costs are just too high when you're all spread out. Mm-hmm. So we're going to try this and have a couple of different innovation centers in different cities, and you'll be able to come there and work with us.
Sounds great.
It's a brave new world. It's really exciting to be in this place where all these things are coming together right now.
Definitely. So just one follow-up question, last follow-up question, because people have asked me, because people that don't come from the technology world and they want to invest, it happens with Bancor and Status and a few others. Why is it a problem? If you can explain in like the least technical way that you can, for people to invest using mainly Ethereum right now with the ICOs or the token crowd sales.
So there's legal issues, especially for Americans, who we're all afraid that the SEC will apply some very stringent readings of 1934 rules to token sales and cram them into an old box, and they may change anti-money laundering. You're probably aware of that. So that if you move $10,000 or more across borders, but what does a cross borders mean? So I'm not sure. So it's going to be really difficult it's like nailing Joey to the wall for regulators. But I hope that that they will see this as a whole new category, and this is kind of the seed of something new that they should regulate separately. But for now, we're going very cautiously. We are not allowed to solicit Americans. We're very clear that we can't solicit Americans. Americans can do whatever they want, but the rule is right now that no token sales should be soliciting Americans. And now there's so much going on in China with so many scams that people are starting to be afraid that the Chinese regulators will step in, and probably they will in the next 6 to 12 months. We don't know what that will look like. So right now there's just a lot of uncertainty. The one thing I would say is if you're an American, consult a lawyer. I can't solicit you, and I can't offer you anything. Second, if you're in China, you're probably fine continuing on the way things are for now. Just use good judgment and diversify your holdings. Don't have 3 or 4 ICOs or tokens. Have 20 tokens. That would be better. And third, it's technically difficult. So every one of these token offerings has a page like ours that explains step by step how to move your money onto an exchange, how to get the wallet set up, and how to take advantage. And then on the day of the offering, you can't get it anyway because the huge Chinese whales have just hammered it.
Yeah.
So we have
during
a pre-sale,
mm-hmm.
and you can send me an email and I'll try to get you into the pre-sale. That might be the only way. It's a wacky world right now.
Yeah, during the Bancor ICO, I was sitting at the Tel Aviv Stock Exchange where they have an office at the floor, and all the people in the room, none of them could get into the sale, which was very funny.
Right. I don't know if ours will go that way. Obviously, you hear about these, but the majority of ICOs of coin offerings don't fill up, don't hit their maximum. So I don't know. A pre-sale is kind of where it's at because if you'll get it at a discount and you get your money back if we don't hit our minimum anyway. Mm-hmm. So pre-sale is a better way to go if you can do it. Also, you're assured. And I think there will be, like Bancor and 10x and things, there'll be ways to participate in these things that might be more fair. But also, there's all this risk around a project like ours that has no software. Mm-hmm. So it's okay, in my view, and I've written about this in Bitcoin Magazine, it's okay to let the big whales come in and take the first shot, okay? And then they maybe flip it, but they're really underwriting, right? We get to get going and start building our product. Then you can wait and see. And if we're making progress and people like it, we get some traction, then you can be a buyer, right? If you're a natural buyer, you can wait, right? So let the other guys take the big swings, and it's a higher risk, higher reward. but they'll flip these things, and then you can come in later when you see that this is going to be useful to you. And our real community is not so much they are actually buying our pre-sale, but they're more joining us and wanting to help. And over time, I think that community will start to become natural token buyers and users. That'll be later.
I see. So it's a good way of looking at it, I think, for like small investors.
Yeah, don't sweat it. If you like, try to get in onto a couple of pre-sales, and that's good enough.
I see. Okay, so thank you again very much, David. And thank you all for watching us. This has been the Finance Magnates podcast interview. And please subscribe and follow us, like everything you need to do in order to keep up with all the new videos when they come out. Thank you.
Thanks, Avi.